Good morning, good morning, good morning, everybody. It is Wednesday, October the 11th. It is just around 5 a.m. Quite a few hours before we get opened, and this morning is going to be some news prior to the open. We have PPI coming out at 8:30. We do have a few Fed speakers, but more importantly, at 2 o'clock, we have the FOMC Minutes. I'm going to share not only why it's significant, but why around 2 o'clock you need to kind of be ready. Tomorrow is the big day. Tomorrow is CPI, and there is also another big round of speakers over in Europe, but not so much over in the US. So I want to share this with you here. First and foremost, we have three green closes in a row. Now, I shared somewhere in the chat yesterday that we have had two closes in a row more than 20 times this year. Less than half of them went on to be three. And I can tell you now, I can count on one hand how many times we had more than three in a row. So that's first and foremost. Secondly, we closed greater than 20% year over year. So, meaning a year ago, October 10th, we are 20% higher than that as of the close yesterday. Why it matters to me, because again, you got to kind of think like a computer, all right? Back here on June 16th, that was the first time that we did that during the course of the year. We closed plus 20% year over year. It was a red day, it was a red close, but we went on to close red a couple days after that, and that was where we kind of dipped out of the 4400s. On another note, loud ass cat. This right here, September 20th, as you guys remember, we were in the 4400s. This is your FOMC meeting right here. The FOMC meeting was here on September 20th, and we'll bring you over to that now. Where do we go? FOMC days. September 20th. It was only a 60-point range day. It was a hell of a lot better than July 26th, but we wound up closing down 41 points on that day, September 20th. And call it what you will, but that drop out of the 4400s was what finally catapulted us into the September drop that we had been waiting for, having had the full moon right up there at the very beginning of the month. So, caution when we do get to 2 o'clock today, and more importantly, caution to the upside, because yes, we have made a 4% run on the SPX. We have made a 5.67% run on the QQQ, and the QQQ has retraced 50% of the entire drop that took greater than 2 months to do. It's already retraced half of that. So, yes, we are due a little bit of a dip, and I want to bring you to here as well. Since September 28th, every single day on the QQQ has been greater than plus or minus 1%. Volatility is still very much alive. So, coming on to that, SPX, nice big bounce, nice recovery into that 43.73, nice entry into that, gap that was created from way back there on September 20th, but not a bullish breakout as of yet. A beautiful inverted head and shoulder pattern, but we are in that trouble zone. So perfect time for a little bit of a pause, a little bit of a dip, to be able to go back and buy that dip so that we do get that bigger run coming off of it. Show you here on the detailed so you get a better look. Well, right here, here's your 4.1%, 4% run after that nice big 7% drop. And as you can see over here with the bounce that we had back going over there at the end of August into the beginning of September, 4.74%. And again, Full moon came here. We knew that. Full moon, show you here as well. That was our full moon. That was our full moon. There was nothing indicative here saying that this was a full moon bounce other than the fact that we knew we were getting a bounce. This full moon does not have to top at the next full moon. So a little bit of caution when you are out there looking at what we've put out, which is a very bullish view heading into October. We've done a lot of work and a little bit of a pause, a little bit of a roll down will give us the proof that we're looking for to see where we can aggressively get into another buy the dip. On the VIX, another cautionary view to that extreme bullish upside. No break below 1622 still. While it's above the 1622, gotta be a little bit careful about that extremely bullish idea. Very easy up here when we're up at 21, but again, as you saw, 21 over here on October the 4th. Granted, yes, we did get a little bit of a dip. Those September 20th SPY 437 calls, they barely doubled. So it's a much bigger picture when you're buying calls with an extremely high priced VIX as compared to buying puts with an extremely low priced VIX. You're getting double your payment more so. On the ES, excuse me, again, tracking this movement that we have had, absolutely nothing bearish whatsoever still. But we are going to be looking for a retracement test somewhere in that 43.75, 43.67, 43.67 more specifically. And then we can get a better judgment as to how healthy this looks so that we can go out and buy the dip. And over here on your NASDAQ, detailed view of everything you see. 8.5% run, made it up into that high over in July. 8.5% bounce. Drop, not bounce. 7.36% bounce up there into the start of September, into that full moon, and a 7.79% drop down here into the September lows. We've just made a 5.67% run, and we've made it back to that 50 retracement, up above 370, back to these highs over here. Did a lot of work. Again, another beautiful inverted head and shoulder pattern right up to this trouble area. So you definitely want to, let me move off this and go to, here's your full moons. I know I got another view here. We're into this traffic zone, right, where we were struggling a little bit with the bounce that we had here back in August, right over here where we fell out back on September the 20th, which was your FOMC day. And your channel lines, as you can see, your resistance lines that are up there, untested still. Still very much looking for upside to continue. But as of this moment, it is much more cautionary for that further upside until we can get a little bit of a healthy dip so that we can get a big bounce to be able to go buy back into that. The dip will be the 5-day moving average. The 5-day moving average is where your dip will be. As of now, that sits right here at 360. We already recovered the 50-day moving average over on the QQQ. And your 5-day moving average takes you right to that big fat 363.61, where we couldn't get up to prior. So that's where your dip's going to be, right around there. Same on SPY. Right around there, around that 430 area. That's your dip that is going to be looking to be bought. For now, still looking for that exhaustion point up to the upside, and then we'll see what we get. Over on Tesla, leave you at that. Beautiful hit to that 268.33. Rolling above this trend line that I've pointed out quite a few times over weeks and months and, well, not years. Here's your wider view of that trend line, how you made that run up here prior to earnings. Last quarter in July, failed on it over here in September, or right back on that trend line again. Come out into a wider view and you can see where that trend line is, and let's go widen out even more, and now you can see where that trend line originates from. So hang on. Damn. I'm not looking for too much more upside over here on the Tesla. Tesla is what it is. Bring you into a very zoomed in version, and yeah, everybody's going to be looking at this right here. Bring you on to something clean. They're going to be looking at this, and they're going to be looking at this. And that's the area of concern that they're going to be looking at for Tesla. For me, I still like what I have, which is 258.94. That's where this Tesla likes to be. 258.94 is what it likes. 258.94 is what I'm looking for into the end of the week. Earnings are next week. Not going to touch it. Have a great day. Have a great morning. Talk too much. Too much coffee. Enjoy yourself.